So my question is this. Investors are looking for technology ideas beyond traditional IT services, right? The thing is how to find the right stocks, how to go beyond the noise and the buzz to look at businesses which really have the spark to scale to something big. What are your thoughts here?
So which is actually what gets us so interested about the digital theme, right? If you see traditional IT services, they were obviously in the 2000s to 2010, they were growing at kind of the 20-30%. But you're now getting kind of 10-12%. If you're getting 10-12% growth, you're happy. In the digital space, you have the potential for explosive growth, right? And this is a whole new segment of the market. These companies really invest significantly upfront, in the case of Netware, to build out a particular type of a platform. But what we find very interesting are consumer-facing platforms, people like Zomato, Paytm, Nykaa, etc., where you create a network. Now, what happens is with a network business, the potential for kind of growth is actually quite exponential. And if you really understand some of the underlying themes of what's happening in India, there are multiple factors that are coming together to help drive digital adoption. Now, this includes the rise of UPI, it includes the explosion in terms of internet penetration driven by cheap data, smartphones. As consumers get onto the internet, right, there is a certain progression that they have in terms of their adoption. Now,
So PSUs have actually had a remarkable run over the last year, but I think it's been driven by a combination of different things. Firstly, you have seen a turnaround in operations, overall operational efficiency has improved. And importantly, across different segments that PSUs are operating in, the business environment has actually improved quite dramatically. Banks, say, for example, are a very good example of the same. Between 2010 to 2020, and especially 2016 to 2020, a lot of PSU banks were really struggling with very large NPA issues. They were struggling with growth. They were struggling with capital. Now, effectively, post 2021-22, with all of these asset quality problems being addressed, you're seeing a very strong turnaround, and you're seeing this turnaround across multiple different ratios. So you're seeing growth coming back, you're seeing credit quality come down, you are seeing operating leverage start to play through, and you are seeing an ROE improvement. Now, valuations which were very, very cheap have basically rebounded, but there is potentially still kind of space for that to grow. But if you just look at the underlying dynamics and look at the underlying value creation that's happening towards digital kind of platforms, growth is likely to sustain at very high levels over the coming decade. If you just look at kind of penetration and levels, India has 5 crore people ordering food online. They're over 50 crore in China. There are 18 crore online shoppers in India. They're over 70 crore in China. Now, a lot of internet penetration, access to cheap data, all of that has only emerged over the last 5 to 7 years. A UPI was only introduced as much as 2016. So I think we're still in very early stages of digital adoption. You're still in early stages in terms of the shift from traditional forms of commerce towards digital platforms. Something which is possibly not very well appreciated is how, as the next generation comes into the primary consumption class, this generation has actually been digitally native in terms of their form of consumption. People in our age group, we were used to traditional forms of commerce and have had to migrate towards digital platforms. The consumer of tomorrow has been born and brought up with digital platforms. So growth is going to be something which is kind of going to sustain at very high levels. We have been from day one, and this is in Feb when no one was kind of expecting it, we've been very strongly stating that profitability of these platforms over the longer term is actually much superior than what people are expecting. What you are looking at is India has the largest import bill of defense equipment in the world. I don't know if a lot of people know this, but we're actually larger than the top 2 or 3 other countries combined. There is a very strong strategic need to indigenize defense because a lot of our defense was Russia dependent. And as Russia is going through various troubles, you need to kind of de-risk from that from a strategic perspective. You're also having issues around geopolitics with what's happening with Pakistan, Afghanistan, China also becoming a lot more aggressive. So you're in a need to increase defense spends, and you also need to de-risk, and therefore you're seeing a lot of traction in the Make in India program.
Before we wrap, please explain it to everybody. क्या हो रहा है?
किसमें So I think it's just optimism being carried
That's
away,
it,
right? As in, it's you've seen this in capital goods, you've seen this in defense, you've seen this in railways. There is a clear story.
I'm yet
right?
to
There
meet
is-
anybody. I'm yet to meet anybody on the channel who says buy railway stocks. But somebody is buying them today. See, they've recovered. Somebody is buying them, they've recovered. So all I'm saying is that if the fundamentals are so off center, why is somebody buying them?
So see what happens is I think it's not just railway. I think it's the market construct at this point in time. What you have seen is I think in the last interview with ET now we were discussing what shows a point when you're starting to see small caps peak. What you have is a clear disconnect happening between valuations and the story, and especially in a period where growth is a bit impacted, right? And in the current with inflation, consumer growth is weak, the global growth is weak. You're seeing that impact in IT capital. So where are you seeing growth? The entire market starts moving towards that and moving towards that in a big way. As a bull market develops, you have more and more people going towards paisa isme ban raha, move towards that. Right? So you're not going into something because of fundamentals or valuations, you're going into something because it's moving up. So I think you're kind of seeing that, and obviously this is not very sustainable, and which is why I think a lot of people, like you're saying on the channel, struggle to explain it.